All right, rise and shine, everybody. We still got about an hour and a half to go before the market opens, and despite the fact, again, I'm on vacation, I'm more than willing to make this video for you guys. Am I awesome or am I awesome, guys? This is going to be the MTBC Halt to Resume Washout Long video as promised. I'm going to make this short and sweet because I'm sure everyone's looking forward to getting ready for the market today. MTBC has already made a pretty substantial gap down. Should be interesting to see what's going to happen to it today. So I've already made a video about this concept in the past. This is just another video to just reiterate the point, to emphasize how effective this setup is. If you guys haven't checked out my other Halt to Resume Washout Long video, it was the one on OPTT. Check it out. There's going to be a pop-up right here in this video for you to check it out. But of course, the concept's still the same, guys. It's all about shorts getting caught. Remember that whole tug of war analogy? Longs versus shorts, buyers versus sellers. In this case, the sellers or the shorts lost out big as usual. Every single time you see a washout long becoming a very easy setup, very easy read, you know the shorts are really, really caught. And in the case of MTBC, this is no exception. So let's go ahead and backtrack a little bit. Let's say you didn't know the squeeze happened up until right before the squeeze and the halt. You kind of realize that MTBC was a stock that kind of took off from about 40 cents, hitting a high of 140, 150, $100, $1.50 on Wednesday, last Wednesday, April 26th. And then you can kind of see that it faded hard into the close. And if you guys follow me on Twitter, I did mention that they were most likely going to prop the $1 mark because of some sort of NASDAQ requirements or something like that. They were trying to meet that. So I kind of had an idea that they were going to do something like that. Of course, I didn't know that for sure, but it was something that I kind of thought they would kind of pull. So they definitely did prop ones, ramped it off in their close. They closed the stock over one. The next day, look what happens. The stock goes up, goes back below one, kind of teasing the shorts once again, and then it ripped on them all the way up past the previous day's high at 150, hitting a high right here on this candle at 160, and then teasing them yet again by dropping the stock below the previous day's high and then ripping more to more highs, hitting a high of 218 on this candle right here, which is still up to this point. I mean, all of these shorts are now underwater already as it is, but the thing that made it more effective was the fact that it lured them in even more by having these nasty fades. Like when you saw this fade on this day on Wednesday, when its stock faded from 150 down to 90 something cents in about an hour or so. Shorts are probably feeling good about themselves, and they're thinking, okay, this thing's another typical piece of shit stock, pump and dump. It's a garbage company, blah 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 blah. You justifying their trades with fundamental analysis and whatnot. Now they have a chart that's seemingly in their favor as well. And then all of a sudden, the next day you got kind of like a dormant open stock looking like it's gonna fade to oblivion, like every other stock's been doing. And all of a sudden they get the squeeze from hell. And I believe the short sell restriction was on this particular day as well. So that probably didn't help their case. And then all of a sudden you get this consolidation near the high of days, and then a more of a rip. And then all of a sudden you get this big dump, right? This huge red candle and not much of a bounce. You got the whole no bounce market thing going on here in MTBC, and all of a sudden it fades, and then it catches a bid at this support level, which is actually coinciding with the previous day's high around 150, 145 here in this case, about 5 cents off, but more or less the same thing. And then it bounced right back up and recovering back toward 180s and then closing around 160. And then you look fast forward to the next day. You got on April 28th, Friday, you got more or less the same type of open as Thursday. You got that nice dip. You got the low volume shorts thinking that people have lost interest in MTBC. The stock's going to come back where it came from. All of a sudden, they get the squeeze from hell again. I believe the short sell restriction was still on, and there you go. Boom, rips the new highs on the day. And although it didn't break above that previous day's high, the stock still hung around. It didn't completely tank. It faded back toward lows, and this is probably the major short trap right here. Stock closing toward the lows, low volume, and once again, if you think about it, if you're a short and you're seeing a chart like this, you're going to think, okay, stock's closing at lows. That's a sign. That's a bearish sign. We got low volume. Maybe the longs have finally lost interest. They moved on to some other place, and all of a sudden, guess what? The next day, You got a similar open, you got the little fade at the open, and all of a sudden, bam, you got the green candle from Hell again. 1, 2, 3 days in a row. You got the squeeze from Hell. Maybe, no, maybe at this point, it might be just be a short cover squeeze. Who knows, right? And all of a sudden, you get the fade. The stock barely dips back toward 170, and all of a sudden, it rips to 190. And that's when the halt happens. You got huge volume. Look at the volume here. You got like, 60,000, 14,000 shares traded in a 3-minute candle here around 9:39, 9:36. All of a sudden, boom, 600,000 shares, and the rest is history, right? Shorts got caught. Eventually, they lose out on that tug of war battle. The stock goes over that critical level at 218, confirming every single short is now underwater, right? Every single short, even the person that top ticked it here at 218 and tried to go for that home run swing trade, multi-day swing trade short, trying to go back to below one. He's down as well. Stock rips to 287. At this point, you can kind of see in the volume, right? You got the 1.6 million share candle right here. The stock just blew right through it. This the moment the stock blew through 218. You got these huge green candles one after another. This red candle attempted pullback, very very half-hearted attempt for the stock to go back, and boom, and stock rips to new highs. So you can kind of see how this played out. It was a 4-day work in progress. It was pretty easy to see if you just kind of took a step back and kind of observed how the stock was behaving, how it was teasing the shorts, how it was luring them in with these kind of short traps, with these tanks and these fades, low volume, making them think that they were good. And all of a sudden, boom, catches them off guard. Probably on Monday, yesterday, shorts were probably, counting their money, counting their chickens before they're hatched, so to speak, right? They're just thinking, okay, we finally got the move. Stock closed at low days the previous day. You got a week open, low volume. Nobody cares about it anymore. They've been thinking about that every single day, guys. Not been working out too well. And there you go, 287 yesterday. The stock was in the 40s, 30 cents even right here. You can see just last Wednesday. So, like I said, let's just not waste any more time. Let's go straight into the footage of how I traded the halt and resume washout long right here. As soon as the stock broke through that 218 level, it did halt around this time, and I played a little bit of a washout long there. Halt, resume, textbook, Madaz setup. Again, this probably wasn't the best example, but it was the first decent example of a nice washout long I've seen in a while, so I might as well took the opportunity to record it. Like I said, if you guys want to check out the more epic washout long on the halt resume, check out my OPGT video. It's already there. Again, the link is on the video, and I'll put it in the description as well. So let's go ahead and check out this video, this footage that I captured yesterday. All right, so at this point, the stock has halted at 957. You can kind of see right there, 957.50. And let's fast forward a little bit so you guys don't have to watch paint dry. But basically, I was just doing my technical analysis on this stock, identifying the supports and resistances, mainly the resistances, seeing where the stock is most likely going to run to. And there comes the resume. There we go. So that's a little bit too quick. Let's rewind that a little bit. So that entry wasn't the best. I know I did tweet yesterday saying that I got in around the 228 area, but happened too fast. I thought I got a fill in the 228s in my second ad, but apparently I ended up around like a 234 average, so my bad about that. But overall, I was very, very confident with this trade, just based on the setup that I explained to you guys. Every single short was underwater. The fact that they trapped 4 days worth of shorts, 3.5 days or whatever you want to call it, worth of shorts with all of those fake pullbacks, getting them thinking that they were in the clear. More people were probably piling on, thinking that they were going to be able to hold this thing for several days. Wasn't the case at all. So, like I said, I was probably doing my technical analysis here and there. Right now on MTBC, you can kind of see that 275 is a resistance level identified off the daily chart. You can kind of see that for yourself. But 275, 250, 275, threes, also very nice numbers as well. But 275 is a level to watch, and you can actually kind of notice the stock did hit a high of 278. So that was pretty spot on. Support resistance, usually very reliable in terms of predicting where the stock's going to run to. But let's go ahead and slow this down. That was pretty quick. Let's go ahead. Stock drops right here off the washout. So I'm looking at that 218 level, which is the previous high. That was basically the breaking point for the shorts, the pain point, the max pain point, that every single short is officially now underwater. So you would expect that prior resistance should hold as new support. And because of the number of shorts that are probably trapped in this, like I said, 4 days worth of shorts, guys, 3, 4, 3.5, whatever you want to call it, days worth of shorts. People probably piling on. Not to mention, shorts are restriction also on as well. I mean, you better believe that these shorts are probably jumping each other, trying to outbid each other to get that cover. So even though I'm expecting 218, also as a contingency, I'm looking at that 2 just in case they do some sort of major killer rug pull down to that 2 whole number. But I'm actually looking at that 218, 220-ish level. And I'm expecting that the shorts will probably jump each other for covers, and it actually probably won't hit 218. It'll probably hit somewhere in the 220s, and exactly that, it hit 225, and you'll see right here. So I did preemptively jump in here. It wasn't the best entry. I did try to add on later when it went to 225, 228, 230s, and I thought I got a fill there. Happened so fast. I didn't realize I didn't get a max fill there. But overall, stock kind of rips right here off of that halt. Now here's where I probably should have sold my first position around when I tapped 250 right there. But due to my confidence in this play, I kind of gave it a chance to see if it would hold that 230 level that I just washed out to 225, 230 levels, and you'll see that I'll do just that right there. I'm gonna do my add right here. So right now, 20,000 shares. You kind of see that absorb. I add right here. So this is where I actually thought I filled more shares. That's why I thought my average was lower than it really was. But again, happened so fast, didn't realize it. But overall, like I said, this is a pretty textbook play. You can kind of see right there. You can rewind it maybe by a couple seconds. You can kind of see that the stock, when it tried to drop right here, right, you can kind of see the bids looking a little thin, right? Maybe the shorts are finally like thinking, oh, maybe that 250 was a huge wick. Huge stuff move. Let's slam this thing. You can kind of see the bids kind of thinning out a little bit. The ass is actually not that thick either, but you can kind of see there's not too many bids here, right? So there's attempted downside pressure, right? Now watch what happens right here. So another attempt to whack right there. More. Now watch what happens. You see that big bid showing up right there. 23,000 shares showing up on the bid right there. I'm pausing it there so you guys can kind of see it really, really clear. 228, 23,400 shares. And the moment he did that, and look what happened on the bids. You got the 227s joining him. Right that. Instantaneously. Let's go ahead and look at it one more time. So in case you blinked and missed it. Okay. Attempted dump right here. Attempted selling pressure. Big bid shows up. Okay. 21,000 shares. And the moment he does that, you got the big bids showing up. Right there. Boom. So every time you see a big bid and a big offer, it's not so much the big bid and the big offer. It's what actually happens, right? Do other people join him? So in this case, 228, you got that big bid, and then you got the 227s backing him up right there. 228's showing up to the fight. He has his boys backing him up at 227 right there. Boom. And all of a sudden you got the bids jumping back over 230. Me immediately recognizing that. You see me trying to get in there. 230s. I knew that moment that the 227s came to back up that 228. This thing was going to rip. There we go. Now I'm up to 24,000 shares. Try to get 10K there. Didn't get a full fill, but you can see the moment that happened. Look at this thing. Just a matter of seconds. Right? It was 228 just a couple of seconds ago. Now it's pressing 240s. 240 by 245 now. Okay? Look at that. Now the shorts are realizing, okay, that attempted stuff was not actually a stuff. Now we're screwed. We gotta hit that offer to get out. And look what's happens. 250, guys. 250. Okay. Now I'm on the offer, selling 254. As you can see, I already filled 6,000 shares. I'm so confident at this point that I'm going to get executed and that the shorts were really screwed. I didn't even bother hiding size, guys. Look at that. At this point, I'm pretty much all out already, locking $4,700 in profits at this point. Token 478 shares, who cares? But in a couple of seconds, you'll see me actually get the fill anyways at 254 without having to cancel my order and shell out another couple bucks in commissions. You can see the 240 support still showing up right there. And you'll see me get my fill right here, 254 all out. So there you have it, guys. That's pretty much my thought process on this trade. You can actually see, if you fast forward this a little bit, that I actually nearly top ticked this thing. 258 was the high. I got filled at 254. You can see in a couple seconds this thing eventually dropped back. Couldn't get past 258. There you go. So, you know, I was pretty happy with myself at that point. I eventually got back in later and scalped it and made another $700 or so. But overall, guys, you can kind of see my thought process. It's all on the tape read, recognizing the big bids, recognizing the imbalance of buyers and sellers, recognizing that the shorts were screwed and that they were just scrambling to chase their positions once they realized that, you know, their attempts to drop this stock were futile, and that's all there really is to it, guys. Watching the chart, understanding what's going on the chart, and then using that, combining with level 2 tape reading to kind of support your conclusions that you've been drawing off of your chart analysis. So that being said, guys, like I said, just want to keep this video short. Hopefully this helps. And let's go ahead and kill it again today, guys. MTBC still in play. All right, guys, take it easy.